Everyone, Daniel Hashi here with Hashi Trades with some coconut oiled hair. Now, today I want to talk to you about short ladder attacks. What in the world is a short ladder attack? And is it even real? So let's get into it. As you can see, a lot of YouTubers are talking about it, so I want to talk about it too. Well, I want to talk about it because it's been a huge thing, especially in Wall Street bets, and a lot of YouTubers that are focused mainly on the meme stocks, such as AMC and GME. And they're saying the reason that these stocks are not short squeezing again, because they already did the short squeezes because of the short ladder attack. This mythical thing that apparently is so much more stronger than the basic forces that drive the market, which are supply and demand. And the short ladder attacks are the sole reason that GME is not at $1,000. So, where did this even originate? Well, let's look. This article by Klein, I believe. Yes, Gerald Klein is one of the things that's heavily referenced on Reddit and Wall Street Bets as the anatomy of a short attack. So let's just read it a little bit. Basically, they call it abusive shorting. It's not a random act of hedge funds. They're saying that they're selling it back and forth, passing it back and forth to each other, and it's building a ladder down. Now, how about people are just selling their positions? How about Robinhood disabled buying, which is where a lot of these meme stalkers were, and these meme stock traders were, and they just sold because they panicked and they got scared and they had no other way to trade except to sell or to hold. And not everyone has diamond hands, okay? So let's see now. This guy is saying that this is a really, really carefully minute detail planned attack, and you take a large short position, then you crush the stock price, and if possible, okay, but if there are still more buyers, there's going to be short squeeze. Okay, so this is what they were trying to do. To be fair to Gerald Klein, as we know before, with GameStop, they were trying to basically short GameStop into oblivion and just make a killing on it. Yes. But that's not a short ladder. That's just over leveraging your short position and trying to bankrupt a company. Like, there's no ladder movement with that. It's just hedge funds have a whole lot of capital to play with. They short a stock. The stock goes down, down, down. That's not a ladder attack. That's just taking a large short position. So I don't know what this whole ladder action is. A short home run because they never have to buy real shares to cover, and they don't pay taxes on the ill-gotten gain. Yes, taking a large position in a company like GameStop that was failing can bankrupt the company. However, that's still not a short ladder attack. Like, it's just they're shorting the stock. He said that they flood the offer side of the board. Okay, when you're looking at level 2, you can see the offers available, and every stock traded. Okay, I hate when Skype does this. Oh, fuck off, Skype. Anyway, so when shares offered for sale, oh my goodness, exceed the demand, the price goes down. Yeah, that's just basic supply and demand, though. That's not a short ladder attack. It just means when there's more selling than more buying, the price goes down. As I was saying before, and when there's more buying than selling, the price goes up. It's just basic supply and demand. This doesn't mean it's any way a short ladder attack. Now he's saying that they manipulate the laws of supply and demand by flooding the offer side with counterfeit shares. They do a short down ladder. Short A will sell counterfeit to short B. Okay. But, I mean, and they could be lying, but short sellers have said that this is not a thing. It is true that they are using the dark pool so they could pass it back and forth to each other. But the thing about that is that unless you have like inside knowledge, most people are not seeing what happens in the dark pool. A dark pool doesn't actually drive the price of the regular mainstream market. So it might give people the EBGBs. They might be like, oh, why is this being sold? Why is that being sold? What's going on when they see dark pool prints? However, that's not affecting the price action of the actual market. The actual market is still doing what it does normally. Okay, so by repeating this process, the shorts can put the stock price in a downward spiral. No, it's just supply and demand. Dark pool is not using the regular market and the regular brokerages, so that doesn't affect retail traders in the retail market. So basically, he says, flooding the market with shares requires foot soldiers to swamp the market with counterfeit shares, offshore hedge fund, divisive market. Okay. Honestly, feel free, I will link this down below. But I'm reading through this, and this is just a made-up thing. Like, he's just talking about supply and demand. He's talking about hedge funds shorting a company like GameStop into oblivion. But the dark pool and these counterfeit shares traded from a hedge fund and hedge funds are not using the regular brokerages. They're passing it to each other, so it doesn't affect the general market. This is not a thing. Drive me crazy. However, I do agree with what he's saying here. The shorts have reporters with the Dow Jones News Agency, Wall Street Journal, Barron's, New York Times. Okay, yes, because that's actually going to tie to another point I was going to make, is that apparently, according to some Redditors, Jim Cramer said something a while ago that basically was like saying that he used to use something that was similar to a short ladder attack. Okay, but he knew, because of his job and the people he knew in the media, that he could basically talk down a stock, and then with his hedge fund that he was working at the time, back in his, younger years, he would be able to short it and make a profit because he would just talk negatively about it to whoever he knew in the media, and then that would make retail panic or sell or think that the stock was overvalued, what have you. However, that's not a short ladder attack. That's just him using his connections to make a profit on his short position. Like, I don't know where this came from. Apparently, it's just coming from this guy, Klein, and then something that Jim Cramer said a long time ago. Let me have a look here. Where did he say this? So this is talking about this conspiracy theory of the short ladder attack. But what did Jim Cramer say? Okay, so basically this article, let's go. 2007, old, but CNBC personality Jim Cramer has said that he used to do some things that apparently were considered illegal by SEC, but these are strategies commonly used by hedge fund managers to manipulate stocks, especially ones that they are shorting. So basically he said that he could push them higher or lower depending on what kind of position he had, a bullish or bearish, long or short position. Okay, and it's funny, all the links for this video are dead. Interesting. A lot of times when I was short in my hedge fund, meaning I needed a stock down, I would create a level of activity beforehand that would drive the future, said Cramer. It's a fun game and it's lucrative game. Okay, now we know that he's the host of Mad Money on CNBC, and basically the tactic, he said, one of the hedge fund manager's favorite tactics is to get a rumor about a stock to an unwitting reporter at the Wall Street Journal or his current employer, CNBC, in hopes to move the stock in the direction the manager wants. Nothing about that says some complicated ladder. No, literally just use your connections to a reporter that is willing to report on whatever you say and drive that stock price up or down. That's it. So please tell me if you have any compelling evidence or research or tangible examples that prove that the short ladder attack is real and that it actually affects regular stock market. It's not just something that's happening in the dark pool between hedge funds, which should not affect the price action of the regular market. And you could also tell me if I completely am misunderstanding this and I haven't conceptualized it correctly. I would love to hear your thoughts down below. But as far as I'm concerned, short ladder attack is fake conspiracy theory that was created by all these new meme stock traders who just don't want to admit that buying GameStop at $400 was a mistake and the short squeeze is over. However, all of that being said, before I get called shill, call me a shill all you want. I saw GameStop pop today and I believe that maybe by the end of this week it could run to 200. So I'm actually trading GameStop options. Cha-ching! See you later. Bye. Okay, wait a minute. Allow me to humble myself courtesy of Wall Street Bets. Here we have definitive proof of the GME short ladder attack. So, everyone apparently needs to be quiet and listen to user Chipmaker. Okay, 3 months ago, he presented us with this compelling evidence and gave us a reason to diamond hands our GME. Check it out. So, I am humbling myself. I stand corrected. The GME short ladder attack is 100% real. And with that, I leave you. See you later.